Forget what you think you know about banking. Seriously, today we're not talking about spreadsheets and interest rates. We're opening the case file on one of the biggest, most shocking corporate crimes ever. This is the story of Lehman Brothers, and it plays out like a thriller. We're talking about how one institution brought the entire world to its knees in just one weekend. Just let that sink in for a second. A bank that survived the Great Depression, 2 world wars. Just poof. Gone. It's like a skyscraper just vanished from the city skyline overnight, leaving this massive, smoking crater. And that crater wasn't just on some side street, it was right at the heart of the global economy. All right, so like any good detective story, we have to start with the victim. To really get how this happened, we need to understand who, or, what, Lehman Brothers actually was. Why on earth did its collapse send such a massive shockwave across the entire planet? Look, we're not talking about some fly-by-night startup here. This company was founded before the Civil War. It was an absolute institution, a pillar. For generations, people saw Lehman as one of the safest, most permanent things in the entire financial universe. It was practically bedrock. $600 billion. It's one of those numbers that just breaks your brain a little, right? And that wasn't just some number on a screen. No, that was the lifeblood for companies, for people's retirement funds, for investors all over the world. And then, in the blink of an eye, it was all gone. So if Lehman was our victim, then what was the murder weapon? Well, it wasn't a gun, it wasn't a knife. It was something way more complicated and, as it turns out, way more destructive. We're going to call it financial plutonium, or what the experts call toxic assets. The definition sounds kind of simple, but the problem it creates is absolutely devastating. Imagine you own a house you think is worth $1 million. Then you wake up one morning and nobody, and I mean nobody, will buy it from you at any price. That's a toxic asset. It's a black hole on your books, and Lehman was stuffed to the gills with them. So how did this stuff get everywhere? It was a surprisingly simple chain reaction. First, banks handed out home loans like candy, even to people they knew couldn't really afford them. Then, and this is the key part, they bundled thousands of these mortgages all together into these complicated financial products. So when people started to miss their payments, the bundles became radioactive. They went toxic. And the final step? These toxic bundles got sold to investors like Lehman all over the world, basically infecting the entire system. And now we get to the climax. The whole system is sick, the poison is everywhere, and it all comes to a head over one absolutely insane weekend in September 2008. The clock is ticking down, and literally the fate of the entire world economy is hanging by a thread. This timeline is basically a slow-motion train wreck. On Friday, there was still a little bit of hope. Maybe another bank could buy Lehman, take the hit, but by Saturday, when these potential buyers actually looked at the books, when they saw how much financial plutonium was in there, they ran. They ran for the hills. The last shot was the government, but Sunday morning, the call came down, no bailout. By Sunday night, it was all over. Game over. Okay, this is the moment. The point of no return. The whole financial world is holding its breath, and the U.S. government is stuck with an impossible choice. They had 2 options, and honestly, they were both just awful. The choice was brutal. On one side, you have let it burn. This means no taxpayer money gets used, and it sends a really tough message to Wall Street about being reckless. The huge risk, though, you might just set the entire global economy on fire. On the other side, you've got the money cannon. Use a ton of public money for a bailout. You'd stop the immediate panic, but you'd also be rewarding the very people who started the fire. There was just no good answer. In the end, they decided to let it burn. And just like that, the choice was made. Lehman was going to fail. The consequences were instant and they were global. That financial firestorm everyone was afraid of, it wasn't a possibility anymore. It was here, and it was spreading faster than anyone could believe. You see, the $600 billion was bad, no question. But that wasn't the real disaster. The real catastrophe was the loss of something you can't put a price tag on: trust. The whole global financial system, the whole thing, runs on the simple belief that the person you're doing business with today will still be there tomorrow. When Lehman vanished, that belief was shattered into a million pieces. And then the dominoes fell, one after another, with terrifying speed. Banks, totally freaked out, just stopped lending money to each other. The global markets froze solid. And what that meant was that normal businesses couldn't get loans to pay their employees, and regular families couldn't get mortgages. The panic leaped from Wall Street right to Main Street and kicked off the worst economic crash since the Great Depression. So let's just think about the story we've just walked through. You have a 158-year-old titan brought down by its own financial plutonium. You have a single government decision that basically set the world on fire. An entire global recession sparked by the failure of just one bank. Which leaves all of us with a pretty chilling thought to end on: could it happen again?